Nigeria came under the oversight of President Muhammadu Buhari in the second quarter of the year. Data from the National Bureau of Statistics show that the economy grew 2.34% in this period, as the president admitted that his government inherited a virtually empty treasury from the former administration.
With depleted foreign reserves, falling oil prices, leakages, and debts, the Nigerian economy is in deep trouble and will require careful management to bring it around and to tackle the immediate challenges confronting us.
Crude oil constitutes 70% of Nigeria's revenue, but since the fall in oil price since 2014, Africa's largest oil producer has seen its revenue decline, with the attendant effect on macroeconomic variables. For example, in President Buhari's 100 days, the Naira's exchange rate to the US dollar has hovered around 220. While inflation has stepped up from 9% to 9.2% and the stock market value has fallen by 11.91%. It is normal for the citizenry to expect speedy solutions to challenges in any economy. But analysts' perceptions of the Buhari's government in 100 days is mixed.
A few things that needed to be done that have not been done have created much more negative impact on the market. The issue of the ministers not yet named, the issue of appointments not yet done 100 days after.
In terms of appointment of ministers, I think we are used to ministers coming up. Otherwise, that ministers are not there will not mean that things are not going on.
It was delivered, in our view, on the corruption priority and on the security priority. We can see that very serious steps have been taken in both those directions. And their third priority is the economy. And we see some initial moves that are very good.
The president's position on corruption is clear and evident in his approach toward Nigeria's revenue source, the oil sector.
I've seen credible steps taken to try and correct some of the deficiencies we've had in that sector. They've appointed a new head of the NNPC. They've tried to change the revenue collection structure. All revenues from any organization should be paid into a treasury single account. That in itself is a major move.
While the media is abuzz with the 100 days analysis and critics, the New York-based bank, JP Morgan, decided to delist Nigerian government bonds from its index, a move that panicked the domestic financial markets.
So the challenge now is for us to perform well, let the managers manage the economy very well, appoint cabinet ministers so that we can meet those conditions again and we can be readmitted back to the index.
Under President Buhari, the country's external reserves has grown by 6.5%. A weakened naira and falling crude oil price has, however, militated against investors seeking safe havens through capital raisings and expansion drives. While the president is yet to appoint his cabinet members, fingers are crossed as guessworks on his policy direction remain guessworks. Temple Ashaju, Channels Business News.